Hey YouTube, it's Nick here. Welcome back to the channel. We're going to be doing a market watch video. Today is July 11th. So we're basically going to cover everything that's happened this week and kind of go over everything that I believe has been relevant for the market so far. And we'll just go straight down the list. So Robinhood, they've been on a tear this week. They had the Trump accounts launched. They have a new chain where degens, they're making their money in crypto. Dow is still at all-time highs. AI has been leading the rebound despite all the news that we've gotten this week. We're also going to look at my boy Tom Lee. He made a prediction a little bit earlier this week about how everything's going to turn out for July. We'll kind of touch on geopolitics because, like I said, it's we've gotten a lot of news. Well, not a lot of news, but it's news that should have shaken the market, but it didn't matter. And then we're kind of going to talk about Bitcoin. Are we at the bear market bottom? A little bit of MSTR, and then basically what's going to be going forward next week with CPI data, PPI, retail sales, and major bank earnings. Where we go next and what I'm doing. So first things first. Global equity markets are tracking green across 13 of the 17 indices, with the S&P 500 up. The VIX is down over 5%, setting a risk-on tone that crypto is falling rather than leading. And then we also, like I said, we have the CPI coming next Tuesday. But first things first, yeah, the Strait of Hormuz is closed once again until further notice. The Iranian regiment announces. So a critical global choke point handling roughly one-fifth of the world's oil supply has just been shut down by Tehran. The move could ripple through energy markets and geopolitical tension within hours. Now, oil did see a spike in this, but it still didn't matter. It didn't matter. Everything's been doing good. If we look at the fear and greed index, here, let me just move this a little bit. The stock market is at 49 now. It's in neutral. Last week it was in fear, and then I would say even last month it was in fear for the most part. And basically, this is it's like whatever, right? But the VIX is low. So when the VIX is low, this isn't financial advice, but when the VIX is low, this is when not only institutions but retail, everyone is more willing to put their money in riskier assets for a higher return. But the time you should be deploying your money really is when the VIX is super high. This is usually when you should be putting your money in because this is when everyone is scared, everyone's pulling their money out, prices are falling. That's typically the time where you do want to deploy. Just FYI. So right now that it's going low is people who've been investing throughout all of this year. You probably enjoyed a decent week. And then crypto, if we look at it, it's still in fear. If you are someone that cares about that, this long story short, this is the time where you should be deploying money. If you ask me, not financial advice, but Bitcoin really is the only thing that matters in crypto. Everything's kind of built off of it. Everything bleeds to it. But I want to jump right into what Tom Lee said earlier this week because I've been wanting to make this video, so I just had to kind of keep everything lined up so we could get to it. So let's just hop straight into that. Let's see his July market call.
Head of research at Fundstrat, chief investment officer of Fundstrat Capital, as well as a CNBC contributor. You weren't really impressed with June that much in terms of the averages kind of stalling out, and you expect July to be better as valuations are more reasonable and sentiment is not crazy bullish. Does that sum things up?
Yeah, I mean, July we're going to get Q2 earnings,
Right.
and in the first quarter, earnings came in way better than expected, and so the market's PE is actually lower now than it was in January by 1 point, one full turn. And I think second quarter earnings are going to surprise to the upside again, so the market's going to get cheaper again, and that means there's room for PE to expand. So I think July is going to be a stronger month for stocks.
8,000 is doable this year.
Yes.
The S&P.
Yeah, and because 8,000 would be roughly 20 times 2027 earnings of 400. I think that's a low estimate. I think the PE multiple could be 22 or better, so that would be even 84, 800 kind of would be the upside into year end. But I do think between now and year end there should be something that might feel like a bear market too. Not in July, but maybe between August and October.
Why not in July?
Well, I think for things Joe cited, June wasn't a great month, and I think there are a lot of fund managers trailing the benchmark this year. Only 23% of fund managers are beating the large cap growth index. That's the lowest number in almost 5 years. So I think there's going to be a lot of dip buying this month.
What do you mean? It feels like a bear market. Does it go down 20%?
It might.
And what average? Are we talking about the Nasdaq or the S&P?
I think both. This year the February to April decline felt like a bear market, and that was only 7%. But I think in later this year we have a few things that will test the market. One is the market is going to test the new Fed because he has a new framework and a new way to look at inflation, and we know that there's going to be a gradual unlock of the SpaceX shares, and that's a headwind. And I do think there is going to be a cumulative shortage of petroleum products, so that's a headwind. And I think margin debt's kind of high. So I think four things that could unravel in a way that might feel like a bear market.
So yeah, SpaceX this week already did enter the Nasdaq, and it actually went down. So so the Nasdaq was forced to buy SpaceX shares. I don't think now is the best time to get into it, but I do believe that it will be a decent stock to hold. I just don't know when. But yeah, so that's interesting. It was trading at around 164 when that video was uploaded, but right now I believe it's below 150. I think it's almost at its IPO price almost. So if people who bought and then held or that couldn't even exit after they bought when it did IPO, they're probably not feeling too good. And the thing with SpaceX is that the insiders they're not even able to sell their shares yet. So dear God Almighty. But I get exposure through that anyway through the Nasdaq. But that's just something to point out right there. The next thing I want to look at is Robinhood. Like I said, we're not gonna dwell too deep into the new chain because we're not here for crypto. The only crypto we really care about is Bitcoin. The thing that I actually want to look at the most is the Trump account. So this is something that I think is very not very important for the market, but this is one of the reasons why I am so bullish on Robinhood because of the ease of how it's able to get people into investing. And that's the thing. A lot of people can't comprehend that it's so complicated for the average person to get into investing. Like even for me, like it just a lot of the information just doesn't make sense. It didn't make sense. A lot of people spoke as if you knew exactly what to do. And the thing about Robinhood is that for even just something simple, just starting with just $1, that is so foundational to getting someone to start because back in the day if you wanted to invest in stocks you had to at least buy the share. So trust me, it might seem simple to the not to the average person but to people who've been in the game for a long time. It's like okay, yeah, you can just start with $1, but that means a lot, especially to retail, especially to people that don't feel like they even have enough money to invest, or but they don't see the value in having someone else manage their portfolios and things like that. So let's hop straight into that.
Children can, at the age of 18 and after, become very wealthy people, come into the world with essentially no money and end up at a pretty young age being very rich. And that's something that we've wanted to do, this country's wanted to do for 25 years.
President Trump today heralding the July 4th launch of the Trump accounts that give millions of American children born after January 1st of 2025 government and matching corporate funds. The funds invested in index ETFs from State Street, BlackRock, and Vanguard. The State Street Spider Portfolio S&P 500 ETF, ticker SPYM, which tracks the S&P 500. Pretty conservative. Warren Buffett loves anything that tracks the S&P, so just put your money in there and let it compound. That will be the default investment option, but other investment options include iShares Core S&P 500 ETF, ticker IVV, Vanguard Total Stock Market ETF, ETI, Spider Portfolio S&P 1500 Composite Stock Market ETF, SPTM, and iShares Core S&P 500 Total US Stock Market ETF, ITOT. Once families have decided on which one of these they want to invest in, the next question is, how do they then actually access those accounts and when? That's where Robinhood comes in. The financial tech firm and trading platform giant landed the opportunity to be the brokerage and technology partner helping families access and manage the Trump Accounts app. Joining me now, live from the White House, is Robinhood co-founder and CEO Vlad Tenev. Vlad, Robinhood is known as a trading app, best known as a trading app. Why did you want to be the technology partner for the Trump Accounts program, which by design is all about long-term investing?
Well, Robinhood has always been about ownership. Our mission is to democratize finance for all, and we believe that a future that's owned by few people is fragile, and that's why we want to make everyone an owner. We believe that broad ownership is essential for a free, stable, and prosperous society. Right now, the U.S. has 62% of individuals currently own stock, and we see the Trump accounts as the best possible way to get that to 95% plus and extend that ownership to age zero, so that not only do these children get to reap the benefits of an extra multiple decades of compounding, but they also become more civic-minded. They develop an appreciation for great American industries. They become more financially literate, and they understand just how amazing the free market system that we have here in this country is. So we're honored to serve as initial brokerage and trustee for the program in partnership with BNY, and everyone now can download the app. Lots of people have been doing it. It's been one of the top apps in the App Store, which is very rare for a financial product, and millions of kids have already gotten invested into this great market that we have. So you get the $1,000 kickstart for Treasury. I think everyone that has a newborn child and really a child under 18 should be taking advantage of this and downloading the app.
100%, but the 1,000
Just gonna stop right there. So when he said over 60% of people are invested in stocks, like keep in mind, like these aren't people that actually even understand how it works. Like these are people like a lot of this is people who just maybe have a 401k at a company or something like that, or they get a stock purchase of the company they're at, but they're not really like looking at this. Like your HR director who's on salary and has a 401k that goes into a broad market index fund. They don't care about the stock market or anything like that. So I just wanted to throw that out there. Like even though he said over 60% of people own stocks, it's not like a lot of people don't understand it. And that's why at least for a platform like Robinhood, when it does come to investing, is that the ease of access to it, that right there is so powerful, is that you can literally start it with $1 a day. Like even like if you have a 401k, no one's going to tell you to put $1 a day into your 401k. And then on top of that, if you do put $1 a day into your 401k, especially if you get a match at your company, you're leaving so much money on the table where it's like you don't have that time to kind of test things out and kind of see it. Like if you get the 401k match with a company, obviously the right thing to do is to take it, right? But you're going to be deploying a lot of money into there over a long period of time. So I think with something like Robinhood, when people might not have that or they have no experience with that, or maybe they're just trying to scrounge together just a little bit of money that they have, they can get into this because the whole point, and they'll kind of talk about it in a bit, the whole point of all this is compounding. Is time in the market beats time in the market. So even just $5 a day into a low cost index fund can give you a nice juicy return even just in 5 years, right? Even if you just have $5 a day, but even just one, like the hardest part is getting started. And once you do, and once that compounding starts working, that's when you get to see the fruits of your labor, if that makes sense. And a little bit about this Trump account. The day They didn't I don't know if they're going to mention this too much, but basically this is for people that are this is a good thing if you have kids. This is a good thing if you have kids, but this is only for people that are born like now until like the year 2028. So that's just one thing to point out there. So I don't know if it's going to continue after Trump is out of office, but if this even just $1,000 put into this, that like they said they would give you if you kickstart this for your child, it can turn into something beautiful, and they'll kind of talk about that in a quick second.
$1,000 seed money in, just to give people an idea, because we never, unlike the other networks, we never assume that people automatically understand what compounding really means. The $1,000, and if you want to look
Right.
at it by age, because you can't touch it till you're 18, but if you look at it by contribution, if you just left the $1,000 in the account and you added nothing per year, your parents, grandpa didn't add anything per year, by 18 you'd have 6 grand. So 1,000 turns into 6 grand by doing nothing. Then if you do $250 per year, folks, by the way, that's $21 a month. If you could just save $21 a month and throw that in there, that 1,000 becomes 19,000. And if you add the maximum per year, 5,000, by 18, age 18, that child will have $271,000. It's just so stunning to me to see this, Vlad, because I understand it, but it's time that we, as you say, democratized investing and let people understand that they too can actually be a part of the American dream. I want to know about your part in this, because you had said in your first quarter earnings call that you would get, I believe, a fee, what is it, like a cost plus with a small margin. Can you just explain that and how that works?
Yeah, so we're serving as a government subcontractor in partnership with the Bank of New York, which is the nation's oldest and most storied bank. They're serving as the financial agent. Yeah, and we're operating this program at the lowest possible cost. We want to make sure that these children's accounts are invested for the long term, and they get to keep as much as possible of the return, so that compound magic that you were describing, really Albert Einstein described compounding as the eighth wonder of the world. I mean, the math is unintuitive, but you can see how even just the seed investment can multiply to large numbers. So yeah, we're proud to be furthering our mission and building a relationship with the next generation of investors. And I think Robinhood wins when the American economy wins, and when 95+% of all individuals in this country are invested in our great American companies.
Oh, 100%. And especially when the only funds that are allowed are S&P or a little bit broader than the S&P. These index funds over time have proven over and over again that they are just an amazing growth engine if allowed to spread out. And speaking of which, you don't have to cash out at age 18. Look at the compounding. If people hold it to the age of 27, this is really stunning. The growth, if you add 250 per year, like I said, $21 a month, that $1,000, if you hold it till age 27, is $51,000. Even if you don't touch it. And then 5,000 per year, 742,000. That gap, that difference between 51,000 and 742,000, folks, that is the best example of why these funds are just such a brilliant idea. Vlad, you guys had to, I would imagine, spend some money to get technologically up to speed to make sure you could handle the brokerage aspect of all of this. What did you have to do? Give our investor audience just an idea.
Well, some of our best people have been on this project. It's not just the funding, the money, it's the human capital, having our great product managers, designers, engineers. The intent was to make this the best product that the government has ever been associated with, because the mission is so positive, and it could change the lives of tens of millions of children. So we wanted to put our best foot forward. And we also had to spend a lot of effort making it a really compelling experience for philanthropists, because there's two sides of it, right? The investor side, the child has the benefit through low fees and a great experience, but also we want to make this the best charitable giving vehicle. And charitable giving can be complicated. You never really know who you should give your money to, and this is a great default option. And so we have to build employer infrastructure, charitable giving infrastructure, and many people. You saw Michael and Susan Dell giving over $6 billion. Ray Dalio, over 50 companies have pledged to fund the Trump accounts of their children who have newborns. So we see this becoming much bigger, and we built it to scale.
I'd be remiss if I didn't ask you about crypto and Bitcoin. You just came from London where you announced.
We'll get to Bitcoin in a bit, but yeah, if you have a kid, this is a no-brainer. It's a free $1,000. If you don't touch it, they get a free $6,000 at the moment that they turn 18. And obviously, if they keep it in there and there, because the thing is that it's essentially it's a traditional IRA. Long story short, for your kid. Well, why wouldn't you do something like that? Now, me personally, I don't have any kids right now, but if I did, hell yeah, I would sign them up for the Trump account. That's something that I think is very important. If you do have one, look into getting some more information to that. Robinhood as a whole, it's decent. It's just as good as Fidelity or Charles Schwab or any of those. I think the thing that one of the gripes that people have with Robinhood is that they believe that the app is gamified. They show you things like prediction markets, and you can toggle to have those things not show up for you. But at the bare bones of just what you get out of it, it's good. Not on and even on top of that, let's say you don't have like a 401k with your company or a stock match with your company that you're working for. They also give you access to a Roth IRA, which they give you a 3% match on if you have gold. And if you don't want to pay for it, then you can even get a 1% match, which is better than nothing. And then the third thing is that if you do qualify, they also give you access to a decent credit card. It's actually really freaking good how much the credit card is. You get like 3% back on every purchase. So yeah, it's actually really good. Next thing we're gonna look at is basically this is a market warning. So it because this is kind of where we're gonna go from here, right? Top of comment says elevated prices are likely to continue. So everything around you has gone up. You're losing your purchasing power by the minute. So that's another thing why apps like Robinhood are so good. One, you get an APY for just having your cash sit, which is this is something that's been like being pushed so hard with not only the Clarity Act and all these things with the banks because a lot of them they're not giving you anything for keeping your money in these accounts. So places like Robinhood and Coinbase and there's tons of others. There's a lot. There's a lot of apps that are giving you yield just for holding your cash or even giving you access to an easy to set up savings account. And a lot of the banks they don't want you moving your money out of Chase or and some people argue that they don't even want people in like rural areas having their local banks closed down because these things won't give them access to yield on their cash and stuff. But that's the kind of the whole point of all these apps is that they want to give people that freedom and that access to actually earn something for the money that they're losing the moment that they get it deposited into their checks.
I think that consumers are going to continue to complain about elevated prices going forward because CEOs don't really have much of a choice. Hello, my name is Dana M. Peterson. I am the chief economist at the Conference Board. It certainly wasn't surprising that CEO confidence fell because the survey took place in the span of May 4th through 18th, which was the height of the conflict in the Middle East. And so I would imagine CEOs' confidence would be materially better today, even if it's still somewhat negative. The industries that would probably be the most harm are those who use inputs like fossil fuels, fertilizer, chemicals like ammonia and sulfur to produce derivative products like groceries and also aluminum in terms of construction, but also the services around those things like restaurants and retailers who are basically going to be feeling the crunch, will need to pass those costs on to consumers. We think headline PCE will probably peak in the third quarter. And of course, the CPI numbers are going to probably be higher because they typically are because they're just different measures. But nonetheless, we are not going to be anywhere close to 2% inflation by the end of this year, probably not until sometime in 2028. Consumers are spending less on expensive goods and services and more on cheaper options. They're also shifting the composition of their spending to things that are more necessary rather than discretionary. And so consumers are shying away from those big ticket items. And when you look at, again, the services, they're spending more on things like utilities and shelter costs. I do not expect a downturn in the economy. Do I expect slower growth because of the inflation shocks? Sure. But, the U.S. economy can grow anywhere from 1.5 to 2% and be just fine. 1% is kind of stall speed and it feels like a recession, and it also increases the likelihood that you do go into a recession. That's not what I'm anticipating. I would not look at the stock market because financial markets are financial markets. They are not the real economy. I think an easy measure for most people is jobless claims. So what are jobless claims? They're basically the number of people who file for unemployment insurance every month. And so far, that number has been very low, close to historical lows. So if you start seeing that number over the course of a month or several months start to rise precipitously, that's a signal that something's wrong.
All right. I'm gonna unpack like two things with that. So one thing she basically said that the stock market is not necessarily the real life market. And she has a point with that because the market is manipulated. So a lot of these people they dump money into certain markets to get retail in, so then that way they can either slowly rug pull them, slowly sell shares, and then that way the retail that comes in becomes the exit liquidity, regardless of everything that's happening. Because everything around you has gone up in price, but at the same time the stock market has still reached all-time highs, not only in the Dow, the Nasdaq, and the S&P 500. So she has a point there. Second thing is that she said that basically all this inflation is being pushed onto consumers, which I mean, yeah, think like I made a video on something else, not related to this channel, but at some point in the video I mentioned that back in the day, like if I bought a video game, all I needed was $40 to buy that new video game. Now video games are retailing at 60, 70, some of them 90, and might even potentially be $100. So the same thing I've been saying in this whole video is that your purchasing power is going down every day with the money that you hold. Um, there's one more market warning I want to see. This is basically about 3 or 4 analysts. They're coming on to see where stocks and everything goes from here.
President and wealth advisor Ryan Lynch. Also with us is John Lonsky this morning. Good to see you, Ryan. Thanks for joining the conversation.
Thank you for having me, Maria. Great to be
We
back.
got a market that is indicating gains in the Dow Industrials, but once again, we're seeing a little question and rotation out of certain tech names. Nasdaq is low right now by 76 as the Dow trades higher by 114. Even though yesterday we had gains across the board, we saw a little bit of a recovery in chips and tech as all three major indices finished higher. Semiconductor stocks rallied and oil prices dropped. When all was said and done, the Nasdaq was up 336 yesterday, and the Dow was up 139. Micron Technology was a major highlight, up 4.5% on the session. SanDisk was up better than 7%. And we're looking at chip stocks this morning, which are mixed. Taiwan Semiconductor trades higher, but SanDisk is pulling back by 2%. Intel's down 2%. Micron's down 1%. Oil prices this morning are hovering right around $72 a barrel, 72.17, which is up just a fraction. The International Energy Agency says global oil demand will decline this year. Consumption expected to decline by 1 million barrels a day. The IEA expecting a demand rebound in 2027. Ryan, we're also awaiting the debut of SK Hynix on the Nasdaq today. Let's see how investors react to that in the middle of this uncertainty around chip stocks. This will be a good test. What are your expectations?
Yeah, well, obviously yesterday was a good positive sign to see a bit of a recovery for the semiconductors. What I really think is happening is that the market, starting yesterday and then again this morning, is starting to look past some of the geopolitical issues we've been dealing with and looking towards Q2 earnings. Right. So what we're seeing is that we're moving in this AI build-out phase into more of a payout phase. So I think a little bit of the sell-off this morning is just a little bit of rebalancing, a little bit of setting expectations for going into next week. We still really believe that investors are putting their money where their mouth is on this AI trade. We still think we're in a great spot for the building phase. And for Q2, we're going to look more for what's looking ahead, right? What market commentary is going to be more than what even the actual earnings are. So for our clients, we're still very bullish on tech. Semiconductors has been a little bit of recovery, like you said yesterday. We'll see where it goes next week. It's still something we believe in strongly.
Okay. Meanwhile, Microtechnology is announcing plans to boost spending to more than $250 billion through 2035, strengthening the U.S.'s semiconductor supply chain, Ryan. And we've seen demand for memory prices soar. Prices actually are soaring because the hyperscalers are buying all the memory. These projects include projects in New York, Idaho, Virginia. Shares of Micron this morning, as we just showed you, were pulling back, but it had a great day yesterday and has been trading higher for the last year. Ryan, you think we're going to see a resumption of gains within semis?
I do. Listen, we're really looking for where the money's being placed, right? I think a big part of what we're going to start seeing in the next couple of weeks of this earnings season is where is the AI spent, right? The capital expenditure continuing to be strong, and what does that mean for profitability? We still really think that the capital expenditure is going to remain resilient, which is a positive sign for these names and something that we're looking forward to.
Yeah, it's funny because I just spoke with Brad Gerstner about this from Ultimate Capital, who was looking specifically at the revenues of a company like Anthropic to actually decide whether or not he thinks this market stays elevated. Listen to what he told me this week, Wes.
What set the markets ablaze earlier this year was Anthropic's revenue and OpenAI's revenue. If AI revenues are showing that we're earning a return on the $1.2 trillion of annual capex that we're now spending on AI, then markets are going higher. If we don't have those revenues, then people will start questioning whether we can afford this $1.2 trillion capex build out. What I'll tell you is the U.S. is ahead of China in AI. The revenues are showing up in May and June for the companies like Anthropic and OpenAI.
Ryan, is it that?
All right. So AI is not going anywhere. If there is some way that you can use it or increase your productivity or make some money off of it, this is the moment where whether you like it or not, this can be useful for you in changing your life. How you can do that, I don't know, but a lot of companies are adopting it. It's being adopted in every like you search anything on the internet now, AI is involved. You go shopping a lot of places, AI is going to be involved. You go shopping online for something, AI is involved. A lot of it's not going away as much as people want it to fail. And the money that these companies are dumping into the capex, and what they mean by capex is infrastructure, and basically they're projecting more earnings down the line, so they're investing more money back into the business, so that way they can cover those costs and obviously stay in the green. So it's not going anywhere. If there is some way for you to get exposure to AI in some capacity, I would just say go for it. If there's something you've been wanting to do, something you've been trying to keep on the fence for a bit, just start it. And maybe AI can help you with that in some capacity. How? I don't know. But it's not going anywhere. It is something that's going to be in our everyday lives. And the people that take advantage of it being here now, those are the people that are going to look back and say, man, thank God I took that risk on myself. So just want to throw that out there.
That simple. Let's see where the revenue is for a company like Anthropic to decide whether or not the broader market holds up.
I don't know if it's always as simple as picking one name, but when you have a major player like Anthropic and a company that certainly we're keeping our eyes on as we move forward here the rest of the year, it's always a good sign. So it's a huge space. It's a major industry that we're talking about. And for our clients, we're going up and down the entire supply chain of this AI build-out. But when you see revenue start pouring in, that these companies are actually making money, and that's what investors have been waiting for. If I'm putting all this money in the market, where's my profitability coming from, and when can it happen? Hopefully we get some good guidance this week.
Well, that's right, because the earnings season is that kind of transparency in just that, John. Second quarter earnings season has begun. Delta earnings are out. They reported a double beat this morning, and of course we're waiting on the major banks next week. They'll begin reporting on Tuesday with Bank of America, JP Morgan, Wells Fargo, Goldman Sachs, and Citigroup all out Tuesday morning. John, give us your assessment of the second quarter earnings season that you're expecting.
I think the news on profitability will be positive. And of course, that tells me that the downside risk facing the equity market at this point in time is very much on the low side. It's incredible. Delta, despite sky-high jet fuel prices, did pretty well. Of course, hedging may have been involved there. With the banks, credit quality is sound. I want to add that capital markets activity was very, very strong in the second quarter. We had the issuance of investment-grade bonds up by 39%, issuance of high-yield bonds up by 36%, and despite all this worry over private credit, leveraged loan activity was up by more than 80% year over year.
Happen is that the Fed's divided, right? We know that. We saw that from the minutes. So right now they're kind of in a tough spot, trying to figure out which direction to go. And also under Kevin Warsh, they're not giving forward guidance intentionally the way that we're used to. So investors are really going to have to try to navigate by finding high-quality names and look past some of the short-term moves that can impact inflation. We think rates are going to come down. Again, what's going to happen is oil is going to drive a lot of the short-term inflation conversation. We'll see where this conflict in Iran heads.
Yeah, look, John, I like the idea that Warsh has put together this task force with these leaders. Kevin Warsh said yesterday the best minds from a range of disciplines in these task force. And by the way, Anthropic also named former Federal Reserve Chairman Ben Bernanke to its long-term benefit trust. That's the independent governance body which advises the company and appoints its board of directors. Your thoughts, John?
Well, it's going to have
Nice. So, where does the market go from here? I'm going back to what my boy Tom Lee said. I think we're going to have a decent time in the market right now. Uh, we're still overdue for a correction, but like even some of the analysts said, I think the geopolitics they took a back seat this week because the people that are really deep into the market, they're worried about the CPI, PPI, retail sales, and major bank earnings, like I said earlier in the video. And that's where I think we go next, where we have a little bit of a rally in everything in July, but at some point, I argue Q3 or Q4, that's when we will get that drawdown. But at the same time, this isn't, at least me personally, this isn't financial advice. You don't want to be on the fence. Like, yeah, you can play it a little conservative because, like I said, we're stock market, we're in neutral. So it's like you don't want to put your whole life savings in, and then everything comes out, and then boom, we go into fear. You go down, and then you basically bought high, and then you sold low. That's what you not want to. That's what you don't want to do. And then the last thing we'll kind of cover is a little bit of some Bitcoin, a little bit. Basically, this is good news for us. So you might not see it here, but the portfolio actually reached over $4,000 this week. The bad news is that all good things come to an end. I can no longer add my positions to Ask Flash in the portfolio section. So if I did, I would have to pay for it. And I believe that the creator has done a great job with Ask Flash. But me personally, I've spent money on other things for the channel that I don't. At least it's out of my budget at the moment, and I don't want to pay just to look at my portfolio because I don't have to, like, I don't have to pay for this part. Basically, my briefing of what's going on in the markets. There's so many other ways I can figure out what's happening. I don't care about necessarily charts or other stuff like that. So that's okay. We just have to go back to it. But I put everything in, and yeah, we basically we hit over $4,000 when I was looking at everything. I put everything in my Robinhood portfolio in, and then everything in my Coinbase portfolio. So as we're looking with Coinbase, ignore the cash. We're just looking at the crypto that we have. And as you see, the main play with this is that I don't have a problem holding cash because I'm earning some yield there, which I talked about in my most recent video of how I'm doing that to earn crypto during this bear market without deploying basically any cash if I don't want to. So these are currently the holdings of where we're at and current prices. Um, Gold, I'm still waiting for everything to go down with that before I put some more money into that. Ethereum, we basically reached 500 of total dollars invested into it. So I feel like I'm comfortable with that. So I stopped my daily Ethereum buys. If we do go back to $1,500 or anything like that, I might put some money into it a little bit. I would like to at least own one Ethereum, but the main thing that I care about is the big boy, the big daddy, and that is Bitcoin. So we're still continuing with our $17 a day with it. As long as it stays within this $6,300 range, we'll just do that once daily. If it goes lower, we'll double that, and then if it goes even lower than 50K, then we'll come back to that. But right now, just steady accumulation. If you watch my last video, there's other ways that I am accumulating Bitcoin. So even though I'm putting in about that much, around the $17 a day, it's actually a little bit more than I'm at least putting in weekly and even daily because of the other strategy that I'm doing to accumulate my Bitcoin. But if we look at Robinhood, it was a good week. We're up almost 1% in Robinhood. So we're actually doing okay there. I just hate that they show the buying power, and that's the only thing I don't like, that they show everything combined into one. And it's basically only on your phone are you able to just look at the stock portfolio. But as you see here, we're continuing the $5 a day into VOO. We're gonna keep that up no matter what. I plan on stopping QQQM, basically the Nasdaq, once I accumulate one share. Once I accumulate about one share of the Nasdaq QQQM, I'm basically gonna start just deploying weekly into the market. So whatever those that $3 would have been, 3 times 5, 15. We'll just do that on Monday at market open. Over time, typically you get good returns by doing that. Then SCHD, we are. I'm contemplating a little bit with that. Basically because I'm going to shift QQQM to weekly buys, and I potentially might even do that for VOO. But the thing with SCHD, I like, honestly, I would much rather just buy a share every every month, or I think I could do that at least every month, or maybe every week. Not every week, but at least every 2 weeks, or at least one share a month. So I'm still thinking about that because I'm contemplating if I my goal is with the at least with the taxable account is that I want to have access to the money in the long run before I turn 59. I'm okay with paying some taxes on that because I'm not going to stop investing. So that's my point. So I don't have a problem paying the dividend in that over time. but I would like to have access to it. But I'm contemplating if I'm just gonna put those shares into my Roth IRA instead, or instead do double buy because I invest in SCHD in my Roth IRA, but I'm contemplating if I should just keep the bulk of the money that's going toward SCHD in my overall portfolio, like if everything combined, into SCHD just in the Roth. So I'm thinking about that, but I'm probably just gonna keep it like that, or maybe drop it to $1 a day. But once because we're almost there, we're about 76% of the way there. Once we get to one share of QQQM, we'll turn that into just one weekly buy, and then we'll keep VOO at $5 a day, so that way we can continuously buy every day, regardless of whatever happens in the market. And that's the overarching goal for the entire portfolio, is to have the stock portion of everything um, oversee my crypto holdings as well. Now, it might not oversee Bitcoin, but the reason I stopped the Ethereum and that we're trying to kind of taper off with Bitcoin is because I feel like it's not even a feeling. It is. It's a heavy concentration of my overall portfolio, and I just want to kind of diversify a little bit and just keep that cash flow going into equities. But we're not gonna stop Bitcoin. We're basically, after today, we'll be at over actually, no. As right now, we're over $3,000 invested into just Bitcoin alone. So I'm still thinking these are some decent prices to accumulate. I know we won't be here long, but I think at 3,000, I'm going to shift. I'm going to potentially shift, at least not now, but at the end of this month, I'm going to potentially shift to just using my strategy that I spoke about in my last video to accumulate crypto right now. So that way I can continue just holding cash, earning my yield. And then that way, no matter what happens for the rest of the year, I'll have options as far as what I can do. Because I feel like I'm building up a good base for everything. If I'm being honest, I feel like I'm building up a good base for everything. But the main thing I want to push forward now is just on VU, and then the S&P 500, and then just keep cash, just keep cash. Because whether you like it or not, fiat is needed in this world. We need it, and even if it's earning a yield at 3.5%, that's better than nothing. So, and if you want to learn what I'm using the yield for, at least on Coinbase with my when I hold SCHD here, not SCHD, but USDC here, that video will be popping up very shortly. So that's kind of all we got for today with everything. I hope you enjoyed the video. We'll have another one coming soon. I might make one probably, actually, yeah, I'm not gonna stop uploading on this channel. But thanks for coming. Thanks if you made it this far in the video. Like if you're new, subscribe. We'll have more market watch data. We'll talk more about equities. We'll talk more about crypto, all that good stuff. So let me know what you think if you got this far, and if not, that's okay too. But I'll check you guys out in the next one. Have a good day. Bye.